Well, good afternoon, everyone. Hey, it is Shooter Scott Henderson. It is December 10th, 1:29 p.m. I see a couple things that are manifesting. Just wanted to jump on board and share that with you folks. And at the same time, just go over some of our swing trade setups that we have, just to review those quickly. Should take just a couple minutes. Of course, at the end of our presentation, please do review our disclosure. Okay, so let's jump over to the NASDAQ. All right, so a close below 521.42 leaves open the gap right here at 516.91, right there, right? Once that breaks down, even though we have a couple of other levels here that were important, specifically down here around 511.44, and then we have another gap right here at 510.15, really slight gap. Next thing you know, we're down here to this 501 area and 501.93. That breaks down, the floor is open here. Realize our money supply band is our most likely place to go back. Just like resistance, support, support. So this is held through this entire uptrend. Okay, so if we are going to get a sell, we're probably coming back down to at least this low volume band right here in this range of 490 to what is that, 488.30. I would say that's the most likely place that we go. So I wanted to share that as far as my thoughts. I think it's sort of imminent. I had suggested, I believe it was yesterday, adding in SQQ common shares or potentially looking at 515 January QQQ puts. Now that opinion hasn't changed. Now, where I changed my mind is we close back above this 525.55. Now, to be honest with you, you don't even need to go there. You can go to the wick of this last candle that we got. Shouldn't get it back above there. 522.44 about. So you can keep a little tighter stop. It's not going to work. And as it continues to manifest, put a piece on and add as it works into the push lower. Now let's take a look at the SPY. Now, not as aggressive as the NASDAQ. We have clear divergence between the two indices, and we really don't have any gap until we get down here, a break below this 584.33. So first support for me is 597.28, which is this little volume shelf. And then, of course, this back test into the gap, which failed, and then we just got a nice little push on that. So, gap fill is about 576.71. Now, being that the NASDAQ is a little more liberal, say, in the size of the move, that's my preference to focus there at this. But here again, we have the money supply gap or the money flow gap or the money supply line. It's likely we come back and test the top of this. And you notice that we have no other low volume nodes outside of really this right here at the 574.88. So if it's going to give it up, it's going to be pretty quick, I think, from here. I think we open up to a gap maybe before the end of this week. As I look at our different indicators, our volume supply for Elliott wave, which is this red and green band thing here, typically the bullish phase within the leg is ending. So it's waning when it gets lighter green. Okay. So we're waning here. So it's most likely going to come back and, either test this roughly around 511 on the chart. But notice this is still in an uptrend. So if we look at it just from that, technically, the next breakdown would be a close below. We'll hear. Still getting used to the app. Bear with me. So roughly 603, or forgive me a little lower, about 626, breaks below that, then that really is what confirms the move to the downside here on the SPY. All right, so let's jump over to the second phase here. I wanted to go over our swing trade alerts that we put out. So let's go ahead and move over to those. All right, now yesterday we threw out UNH on the CEO assassination. The thought was we got a shot at 50% back. I still think that's viable. We didn't quite get the move we got yesterday, but we got about $3.85 on the move if you took it first thing this morning from that thought. Still in play as far as I'm concerned. Until we close below the prior candles on the legs up, I would suspect that it's going to keep moving in the right direction. That's just my thought on that. All right, then let's take a look at Tesla. Now, Tesla, yesterday we got shaken out, and it's going for all-time highs, which should be around 414, so it's still viable. If you were a little more persistent in holding than I was, of course, that is working. Now, the big winner from Swing Trade Notes last weekend was the SERV. And keep in mind, my thought was when I'm using a new AI ranking system, my thought was I like SERV better, ServiceNow, than the other setups. So for this to continue, the wave count is suggesting that we break down from this push. However, this inside or outside bar being this green, typically we're followed by one similar green candle. So, if you went in with the January or February calls, I think I'd wait and see what happens with this. And you get any kind of back test, I would think about adding or starting a position, especially if we get back to about 50% of that candle. So, roughly a push down to about 13.16, I think is very viable. And I believe my first target up here was around 17.86, still to the upside. That opinion has not changed. Let's just look at ELF. It has not failed yet. It's still grinding up. This wick might have taken you out depending on how tight your stops were. But as far as the upside, I'm looking for a push maybe to this 159.32 at some point. Maybe by and this might be a stock that you're in and out of. Volume's decent, as far as to the upside. So unless trend support really gets taken out, and the hard part here in this low volume market is to stay in a trade. So I'm just going to use the wick of this lower candle here and say that, roughly about 128.50. Close below that sort of invalidates the idea there, but I still think it, has some upside. Let's take a look at Fastly. Now, again, this is saying it's coming off here. And of course, we were stopped out in that. Now, let's just jump back. Sound, I still like it for continuation. Once this retrace or this flag builds out, I think it continues. I don't think we get a pullback. Until we close below this 13.48, I would not be holding a full position on this, though. But to me, looking at our volume nodes, we are rolling over, but that doesn't mean we don't continue. One thing that I'm adding is a lot of volume and volume profile related studies to Elliott wave and Fibonacci. So these projections are measuring the projected Fibonacci extensions if the wave is correct, if 5 is actually done. What this doesn't do, like motive wave does, is it really doesn't give me an accurate projection. It's saying, okay, this is the wave 5. Okay, this is the wave 3. It's not measuring the prior legs and giving me a projection further out like motive wave. However, I do like the other tools in here, the other strategies that allow us to get a better visual, and I can look at more comprehensive things in real time. Like, for example, the setups on each individual chart. And that ultimately is thought there. So, all right. So sound, I still like once we find our base here for another shot to the upside. SWKS is still grinding. This gap, we should get a decent pop around 91 once we get up there. And here again, coming in with our trend support, just looking at our internal numbers right here. It again has done nothing wrong until it's closed below about 87.07. All right, let's look at DG, because I know a couple of you sold puts. Looks good to me. I mean, looks good. Not as euphoric as I would like. It's in the supply band. So we're going to find out really how much our volume grows here, which right now it's skinny to the upside. Realize we do not have a lot of buyers. I have head back over here for this run. And this gap is a huge gap. So, the challenging part with Dollar General, earnings were decent, but we don't have a huge following as far as the funds buying this at this point. However, it gets back above this 84.70 or this 89.08. I think they get real interested in the gap fill because a lot of those boys do chase, gap fill. So that's a thought. Now, this is one on my watch list, which is Wayfair. And I've done really well on this thing in trades. I was in it over here and I was in it over here at that point. I was on the breakdown here. I don't always throw it because I consider it a FOMO stock. FOMO stocks I'm hesitant to put in fundamental trends simply because we're trying to maintain that conservative view in the types of setups that we take. So, but I'm comfortable here because I'm thinking we get a breakout above this 57.76, which really we have no resistance, 69 bucks if this gets going. So, and one catalyst has always been here, earnings and holiday sale. So we're going to start hearing what the Cyber Monday after sales look like. We're going to start getting weekly or every 2-week reports on what everybody's reporting. And if we get any kind of FOMO on that, I would see no reason why we don't climb back up and get back towards our volume nodes, around 875, in this range, this push. I don't know if it's going to be as aggressive as this, but it's pretty close. It's a little different look, much more euphoric here as far as I'm concerned, but structurally intact to the upside. Drive 1, drive 3, and drive 5. So I think we got an easy shot to 58 bucks. I have not thrown that in chat yet, so just sort of a heads up. Now, AI was also in our thought as far as off of this 3 We've got a nice little push to the upside. Maybe we get a little back test. At this point, the high side of an outside bar holds. Typically, you're going to have a bar that is equal to the upside. So I think this does get some FOMO to the upside, but I think to the upside is very viable, $50, $52 from where we are here. So it's actually a great candidate to sell pieces of cash secured puts if it pulls back at all. Get down to about 41, add another piece at 40, add another piece at 37 if it gets down there. That's just sort of my thought. All right, now let's look at Spring Works. Now, this is on my watch. I still like it. We got the breakout. We got a shooting star. It's back testing this. It should flag here, so I don't think it goes below. As long as they don't close below this 40.95. So you're risking $1.10 here if you sell some cash secured puts. If it breaks below, then I'd be out. But look at these price projections to the up longer term. We're talking on the low side. We have no bearish projection. A 56% gain, a 61% gain, a 91% gain to the upside. Now, of course, that's getting way the heck out there in time, but still, I like the upside view of this basing pattern heading towards the upside. So until it invalidates that move, that is what's manifesting in my view as far as this chart. Okay, so let me give you what I would think is, hey, where am I wrong? And we're not manifesting. I'm going to give it a little more. Instead of the second node, let's kind of give it 50 that can. So a close below this 36.18 sort of invalidates that move. That's a little deeper put than I would, stop that I would like on a trade like this. But I think it has a longer term upside that, is advantageous for us. So, but that's what I have for today, folks. Great trading. Until next time.